Hello, students. Good morning. We are studying about the subject bank management. This is Father Alex, and we are in the part of third video, and we are discussing today about the functions of commercial banks. Sir John Page, he says there are four important functions of commercial banks. One is accepting time deposits, accepting current account, issuing and paying checks, collecting checks crossed and uncrossed for its customers. And not only these functions are today found, there are so many functions. The commercial banks, they, they have various functions. Now the customers need not come to the bank. They can do any other activity, any number of activities, any type of transactions from anywhere, any part of the world. You can sit at home. Now you know that we are in the lockdown period. We can remain at home. We can stay safe and go for doing very many important transactions through various mobile banking system, internet banking system. Various apps are there. BIM app is there, phone pay app is there, so many things are there. So let us today discuss about the functions of commercial banks. So there are primary functions and secondary functions. Primary functions, bank accepts deposits through savings bank account, through current account, through fixed deposit account, through recurring deposit account. And bank does discounting of bills, bills receivable and bills payable. And bank grants loans by way of different types of loans, by way of pledge, mortgage, and hypothecation, by cash credit, by overdraft, and etc. So these are the primary functions. Let us discuss in detail. So acceptance of deposits through savings bank account. A savings bank account can be opened whoever crosses the age 18, and there must be a letter of introduction, and must have some minimum balance for savings bank account. So there are very minimum conditions to open the savings bank account, and for your savings interest is given, and for your deposit and for your transactions you can withdraw money through ATM, and you can have check facilities for which you must have some minimum balance. So these are the some norms to open the savings account. And current account, so business people can alone open this account. To open this account, you must have some persons to recommend you, must have a letter of introduction. The person could be an account holder in the same branch, or an employer, or an employee who is working in the bank above the, not below the officer rank. So they can recommend to open the account. To open the current account, so there are some procedures, and for depositing the money in the current account, we may not enjoy the interest, but we enjoy many transactions. We can withdraw money number of times. We can deposit money number of times. So that is an advantage of current account. And fixed deposit. So to keep your money in a fixed deposit for a period of 2 years or 1 year or 2 years, 3 years, or certain number of years, you need to open an account. When you are opening an account, you will be given a receipt, fixed deposit receipt, which is non-transferable. So that is what called fixed deposit account. So for which, after the end of the maturity period, you will be given the deposit money along with interest. But you want to foreclose the money before the period of the maturity, you can also close the account and get some interest. And recurring deposit account, that is nothing but like, so you can the money is fixed, that is deposited every month for a fixed period, say 1 or 2 years, which is payable at the expiry of the fixed period, along with the interest, is called recurring deposit. You know, this can be opened either in the bank or in the post office savings account. The interest rate on recurring deposits will be higher as they are calculated on a cumulative basis. So these are the four deposits, four types of deposits. So our bank accepts deposits through savings account, through current account, through fixed deposit account, through recurring deposit account. And next we will discuss about this granting of loans. So what are the types of loans? You have clean loan. First one is clean loan. Clean loan is nothing but the bank grants loan to the customers without any security, without getting jewels, without getting any properties, anything as security. Simply bank gives loans to the customers. But to whom the bank gives loans? This type of clean loan, bank gives only to the salaried people. So whoever gets salary, monthly salary, fixed salary, whose income is fixed, whose income is permanent, whose income is guaranteed, only for those people bank gives loans, clean loan. So in the monthly salary, the bank will deduct the loan amount automatically. It will deduct what is due to the bank, and the remaining will go to the employees. So this is what called a clean loan. Secured loan, by the name itself we can understand secured means you are safe. You are safe by keeping something as a security. So bank keeps something as security and gives loans to the customers. So first one is pledge. There are three types, four types: pledge, mortgage, hypothecation, and assignment. Through pledge, it gets a jewels, and gives a loan. So it has some security. The jewel value is there. If the customer is not able to pay back the money along with interest, the bank can sell it by auction and get back the money along with the interest. So the bank will give the loan according to the value of the jewels. And second one, mortgage. Mortgage is nothing but the loan is granted against immovable property. Now the property will be mortgaged. So the bank will have the document of the property with itself and will grant the loan. The borrower is not able to pay back the loan, then the bank will naturally, like what the bank will do for the jewels, it will do for the property. It will give an auction, give a public notice, and sell the property and get back the loan amount along with the interest. And third one is hypothecation. This is nothing but this is on movable property. Loan is given on the movable property. Suppose we are going to buy a vehicle, buy a machinery. So the document of title will be with the bank until the full amount, the loan amount is settled, only then the document of titleship, ownership will be transferred to the borrower. Then assignment. This is a transfer of an actionable claim. If the borrower of a bank has an insurance policy, he can transfer the policy in favor of the bank before its maturity and obtain a loan. So the bank will adjust the loan amount from the policy amount when it matures. So if you have the policy, suppose you have an LIC policy, so you can give the policy to the bank, you can get the loan. So if you are not able to pay back your loan, so the bank will get back the maturity, the matured amount, and the time is matured. So these are the four types of loans. And also the bank gives these type of facilities. One is overdraft facility. So this facility is given to the current account holders, wherein depending upon their credit worthiness, the banker grants overdraft facility by which the customer can draw over and above his credit balance up to a fixed amount. For example, if a customer has rupees 10,000 in his account as credit balance, he may be granted an overdraft of rupees 5,000, which he can draw up to rupees 15,000. As and when the customer deposits money or check, the loan amount will be adjusted. The interest rate is calculated on day-to-day basis, and hence this interest will be cheaper for the customer. And cash credit, this is also a facility given to the business people. So when they are in need of working capital, this cash credit system is arranged. Under this system, customer may be given, for example, suppose 1 lakh rupees 1 lakh as credit given to the customer from 1st January to 31st December. The customer draws, so one credit 1 lakh credit facility, but the customer draws only rupees 30,000 in the month of January, and another rupees 30,000 in the month of August, and another rupees 40,000 in the month of December. So the bank will collect interest, will calculate interest rate first 30,000 for the period of 10 months. And this one again, the borrower has got 30,000. No, he got in the period of the month of August. So rupees 30,000 will carry interest rate for a period of 5 months, and last loan of rupees 40,000 will carry interest rate for a period of 1 month, because the customer withdrew only in the month of December. So it is a facility, facility given to the customers, so that the interest rate is less, the benefit for the customer is more, so that the customer, the business people can be able to get lot of benefits from the banks. So these are all primary functions. Now we will discuss about the secondary functions. So before we discuss about the secondary functions, let us now just recapitulate what we have discussed so far. So far we have discussed about what are the functions of commercial banks: accepting time deposits, accepting current account, issuing and paying checks, collecting checks crossed and uncrossed for its customers. And what are the primary functions? That they are the banking activities: acceptance of deposits, discounting of bills, and granting of loans. So this is what we have discussed. The next video we will discuss, in the part fourth video, we will discuss about the secondary functions of commercial banks. Thank you for watching.